afternoon, traders. It's Bill Baruch with Blue Line Futures Intraday Midday Market Minute. We have new cycle highs in stocks, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. And if you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yes, we have the S&P handedly out above 4,400 at the moment, and the NASDAQ out above 15,000 here for so far here today. Let's get through this session, but we also have the Fed tomorrow. CPI was really, for all purposes, was in line with expectations. The core read was exactly in line with expectations. And the headline number, which includes food and energy, was just a touch. You had 4% headline and then 0.1 increase month over month. And to that point where core has become a little bit stickier, that excludes food and energy. So as that stays sticky, and then the one that includes food and energy, we know that energy has been lower. Then you're seeing that the services, you're seeing it that the rents, those numbers are not coming down in the way the Fed would want to see. So we've seen some divergences across the markets here today as equities have stayed a bit higher. Some of the cyclical names are doing well. You're seeing the semiconductors continue to do well. AMD has an investor day, an announcement day. That's been a little bit of a tailwind to the space. Additionally, AI in general is doing well here today. But it's the cyclical stocks that have woken up. And really with that, it's the idea that a soft landing is more probable. And it's more probable because inflation's coming down a bit. The Fed is now more likely to wait and see and not hike tomorrow. The odds are actually only a 7% probability now that they hike tomorrow. However, it's a 70%, 67 to 70% probability that they hike in July. So the pause is real, but they're likely to hike again. And because they're not going to hike so rapidly anymore, the economy is going to be able to kind of get its footing, and it won't require cuts later on this year or early next year. So we've seen the stock market perform, but other corners of the market, like metals, precious metals specifically, are doing very poorly, even though the U.S. dollar is not running higher. So with the equity market first, we got the NASDAQ, like I said, out above 15,000. We have some levels highlighted on the Morning Express. I'll tell you here, 15,164 to 15,255 is our next level higher. That's a big pocket of resistance there. And with the S&P, if we hold out above 4,409, our next major three-star resistance target is on the Morning Express. Check it out. So we got to get through today, get through today's close, but then it's all about the Fed tomorrow. We have PPI tomorrow morning. Remember, producer prices are a leading indicator to consumer prices, and we have retail sales, jobless claims, ECB, all on Thursday. So the week is really just getting started. So stay nimble out there. The levels are something to really help guide you through things. So they're all in the Morning Express. Moving on to crude oil. Crude oil is having a good day. Crude oil is rebounding from yesterday's move. We're somewhat of a, to use the Twitter term, sort of a rug pull from Goldman Sachs. They lowered their benchmark expectations on Brent crude oil from $95 to $86, a 10% decrease. China's really not, moving, coming back online from a growth standpoint as many as anticipated, and that's why you're seeing some of these expectations come down. And there really is, like I said yesterday here, it was a buyer's strike. People just didn't want to step in and pick a bottom. But you know what? Crude oil did get down to that previous low from May, and we've seen a rebound. And so I have some levels highlighted on the Morning Express. I like what we're seeing here, but I'll tell you, $70 is going to be a huge barrier from here. And you got the EIA data tomorrow. You also have the API and some of these expectations coming out later today. So that's going to move the market. Now, the OPEC Plus monthly report was out this morning, and they did decrease output in May by just over 400,000 barrels. And about 500,000 barrel decrease came from Saudi Arabia. So Saudi Arabia is pulling their weight. I think that brought tailwinds to crude oil because, remember, Saudi Arabia was the leader in talking about in the recent OPEC meeting that they're going to cut another 1,000,000 barrels in July. Seeing them do that in May, I think definitely it just put your money where your mouth is, and that was a tailwind to the market here today as well. Now, precious metals are not doing good. You're seeing gold really trade down to this 1955 level, and it looks like it's going to potentially try and see what is below there. Now, silver had a really great week last week, so it's not down to the recent cycle lows, below $23, but it has coughed up really all of last week's gains, trading at 23.75. So it's a tough day for the precious metals. Again, that's because the Fed, they're going to slow the pace of hikes, but it's also not going to crunch the economy so much. It's higher probability of a softer landing and less cuts needed later this year or early next year, or no cuts needed. So precious metals on their back foot, despite the fact that the U.S. dollar index is down, but you are also seeing the yen trade lower, and you're also seeing the treasury market trade lower, and a lot of that can really correlate together between the precious metals, those treasuries, and the yen. But however, industrial metals, you got copper moving. It did trade into resistance, 386 there. You got the 200 moving average there. You got a big retracement there, and it did trade into that level. So a lot's going on here as we move into tomorrow, but our team is here to help. Don't hesitate to reach out. 312-278-0500. And remember, futures trading involves substantial risk of loss. It is not suitable for all.